Let us now go through this question so that you understand how do we do the postings, adjustments, and how do we tally the sum. Rucha and Julie are partners sharing profits and losses in their capital ratio. From the following trial balance and adjustments, you are required to prepare final accounts. First thing that I would like to tell is you have to read this line very carefully, because here you get some important information. Here you are getting the profit sharing ratio. Okay, so here the ratio is their capital ratio. Sometimes it is also given as the ratio is 3:2 or 5:1. So the main profit sharing ratio is always given over here. So read the question from the starting itself. Then we have the trial balance. Trial balance as on 31st March 2019. These are the debit balances and these are the credit balances. Note one thing, that all the items appearing on the debit side of trial balance will go to the debit side of trading account or debit side of profit and loss account or asset side of the balance sheet. All the credit balances of the trial balance will go to the credit side of trading or P&L or liability sides of the balance sheet. So you have to read all the items properly. You have purchases, trade expenses, salaries, wages and salaries. Advertisement for 2 years. See, here you have in brackets that advertisement is for 2 years. So this is an hidden adjustment. Sales returns, freehold property, office rent, motor van, stock. The date is 1st 4/2018, 1st April 2018. Your year is ending on 31st March 2019. So this is your opening stock. General expenses, sundry debtors, coal, gas, fuel, carriage inward, carriage outward, plant and machinery. Credit side is capital accounts of Rucha and Julie. See here the capitals are 80,000 and 40,000. So you have to find the capital ratio. So the capital ratio is 8:4. You cancel all the common zeros. You get 8:4. And when you reduce it, you will get it 2:1. So 2:1 is the profit sharing ratio. Creditors, sales, RDD. This is the old RDD. Bills payable and purchase return. After this, you have to read the adjustments. When you see that there is an hidden adjustment, tick over here so that you keep space for the adjustment. Closing stock valued at 88,000, which is the cost price, and 90,000 is the market price. Whenever you are given two amounts for the closing stock, the lowest amount, whichever is lower, 88 or 90, whichever is lower, 88 has to be taken into the trading account. Doesn't matter if it is cost price or market price. You will take the amount whichever is lower. Rucha and Julie withdrawn from business rupees 3,000 and rupees 2,000 respectively for their personal use. These are drawings. Okay, they made drawings. Rucha made 3,000 drawings and Julie made 2,000 drawings. Depreciate motor van by 5% and plant and machinery by 7%. So go and tick on motor van and tick on plant and machinery, so that you have to leave 2 lines for the adjustment. Reserve for doubtful debts on debtors at the rate of 5% is to be created. Okay, so there is an adjustment in the bad debts also. Outstanding wages rupees 800 go to wages and salaries. Since the first term is wages, it will go to the trading account. So tick on wages and salaries. Goods of rupees 6,000 were purchased on credit, but no entry was found in the books of account. These are unrecorded purchases. You have not recorded the purchases. Next is goods of rupees 6,000 were sold on credit, but no entry was made in the books of accounts. These are unrecorded sales. So this will also be going in the sales. And to whom do we sell on credit? To the debtors. So you have to tick on sales and you have to tick on the debtors, sundry debtors. Now we will start the solution. In the books of Rucha and Julie, trading and profit and loss account for the year ended 31st March 2019. Make two columns for amount, debit side and credit side. Start posting first the trial balance according to the sequence. Purchases, debit side of trading account. Trade expenses, trading account debit side. Salaries, profit and loss account. This is a combined trading and profit and loss account. So you have to first make the trading account and continue with the profit and loss account. Wages and salaries. So wages comes first, so in the trading account. Since you have an adjustment, leave a line or leave two lines for the adjustment. Advertisement goes in the profit and loss account. Since you have an adjustment, leave a line or two. Sales returns, these has to be deducted from the sales, so leave a line over here. Sales returns will be deducted from sales after making the adjustment for unrecorded sales. Freehold property, it will go to the asset side. Freehold property on the asset side of balance sheet. Office rent, profit and loss account. Motor van, asset side of balance sheet. This is the opening stock on the trading account debit side. General expenses, profit and loss account. Debtors on the asset side of balance sheet. Coal, gas, fuel, trading account debit side. Carriage inward, trading account. Carriage outward, profit and loss account. Plant and machinery, asset. Capital account, Julie and Rucha. Now we are making this as a fluctuating capital method. So we only make a capital account. That is the opening balance which will go on the credit side of the capital account. By balance brought down 80,000 for Rucha and 40,000 for Julie. Creditors, liability side. Sales, trading account credit side. RDD, this is old RDD which will be on the debit side of the RDD format, which will be reduced, that is less old RDD. Bills payable, balance sheet liability. Purchase return, less from purchases. Then we come to the adjustments. Closing stock, we will value at the lowest price, which is 88,000. Two effects are trading account credit side by closing stock 88,000 and balance sheet asset side, closing stock 88,000. Rucha and Julie withdrawn from business 3,000 and 2,000 for personal use. They withdrew goods worth rupees 3 and 2,000 respectively. So trading account credit side by goods withdrawn by partners Rucha and Julie 3,000 and 2,000, total 5,000. Next effect will be partners capital account debit side. Two drawings, Rucha 3,000, Julie 2,000. Depreciate motor van by 5%. We already had ticked on motor van. So go to motor van. Calculate 5% on 40,000, which will be 2,000, less depreciation 2,000, 5%, which will be total 38,000. Now this 2,000 is your loss. So 2,000 will go to profit and loss account debit side, to depreciation on motor van 2,000. Similarly, you will calculate 7% on machinery. Plant and machinery less depreciation 7%, which will be 966 of 13,800. When you reduce this, you will get 12,834. 966 is your loss. So second effect will be depreciation, plant and machinery on the debit side of profit and loss account. Total the depreciation and write in the outer column. Reserve for doubtful debts or debtors, 5% is created. This you first have to calculate on the debtors amount. RDD is to be calculated after making all the adjustments. So we have unrecorded sales. So add those unrecorded sales first. The total amount of debtors will be 68,000. Out of that 68,000, 5% will be reduced as RDD, which is 3,400. 6,800 minus 3,400, you will get 64,500. This 3,400 is your loss. So it will be coming over here. This is the old RDD which was in the trial balance 1,200, which is reduced. The total RDD is 2,200 for the current year. Outstanding wages. Add to outstanding wages. Okay, add to wages. Add 2,800 plus 800, 3,600. This is your liability. So second effect will be liability side, outstanding wages 800. Goods of rupees 6,000 were purchased and also goods of rupees 6,000 were sold. So we have unrecorded purchases and unrecorded sales. Unrecorded purchases have two effects. Add to purchases total and then less returns. Add to purchases. Second is, from whom do we purchase? We purchase from creditors. So add to creditors 6,000. Total creditors are 28,000. And we have unrecorded sales. We sell to debtors. So add to debtors. And add to sales. Total sales will be 1,46,000. After posting the trial balance and giving two effects of the adjustments, now we start tallying the sum. First, you have to close the trading account. Total the outer column of trading account, credit side and debit side. The total will be, credit is more, 2,39,000. You will write 2,39,000 on the debit side and then subtract the total of the debit side. You will get 93,100. This is gross profit. This gross profit is to be carried to the next account, the profit and loss account. Here you will write by gross profit brought down. Then total the credit side of profit and loss and total the debit side of profit and loss account till here. You will get the total is 93,100. That is, credit side is more, so we will get net profit. Then subtract the total of the debit side from 4,500 to 1,300. Subtract all these items. The total will be 72,634. This is the net profit. This net profit has to be divided between the partners Rucha and Julie in the ratio of 2:1 because it is in the capital ratio. So Rucha will get 48,423 rupees. Julie will get 24,211 rupees. This profit has to be transferred to the capital account. Since it was on the debit side, transfer will be on the credit side by profit and loss account. Now you will close the capital account. Similarly, like we did for trading and P&L, total the credit side and subtract the debit side. The balance will be balance carried down, which will be carried forward the next year. This amount you have to put 1,25,423 of Rucha and 62,211 of Julie. These amounts you have to put in the balance sheet liability side under the heading capitals. Total the capital, Now the balance sheet is complete. Okay, and we had one more adjustment. Advertisement, prepaid advertisement. 4,000 was for 2 years, so for 1 year it is 2,000. So the remaining prepaid advertisement is 2,000, which is your asset. It will go over here, asset side. Now the balance sheet is complete, and you total the outer column of asset, outer column of liabilities. That will come to 2,28,434 on both the sides. Since both the amounts are equal, the balance sheet has tallied and the sum is right.